Hello, everybody. I hope you are doing well in these extraordinary times. Welcome to our new webinar series, Building Up Banks with Mambu. And today we are powered by Creative Construction with Capco and also Solarisbank. We are joined today by Agnieszka Walorska. Agnieszka, how are you doing today? All good, all good?
Hi, very hot, but yeah, I'm looking forward to this panel.
You're in Frankfurt at the moment. Is that right?
Yes.
Excellent. Also in Germany, joining us from Mambu is Michael Pierce. How are you doing today, Mike?
Yeah, doing very good, thanks. Equally just as hot, but also excited to be on this panel today.
It's better than it was. I'm currently in the UK, where it is the one, the short period of the year where it's not raining.
Yeah.
And also joining us from Solarisbank, we have Florian Redeker. Florian, how are you also in Berlin?
I'm in Berlin. I'm in our new office in Kreuzberg, and I actually really enjoy the hot weather.
Excellent. We are going to be taking questions at the end of this. We, in fact, actually do celebrate Pride Month around the world. We have a prize at the ready for the best question. So please, throughout, keep in mind what you want to ask the panel, and then we'll send a little prize in the post for the best question. I want to break down in the first instance, because today we're going to be talking about embedded finance. So first of all, I want to look to the panel about what embedded finance actually means to you in your various fields of expertise. So to kind of give that background, and also as a part of an introduction into yourselves, Agnieszka, where do you view embedded finance within your own discipline?
So my background is in everything what has to do with customers, the whole topic of customer experience, and obviously finance has always been a part of every customer journey. Yeah. Most of the things, unfortunately, we somehow have to pay for, and sometimes you can't afford this, so we need a credit, or we need whatever financial instrument. And most of the time, until recently, there was kind of a media break. There was a separation from the experience and the payment, or the financial service behind this. But as you started seeing a while ago, and for me, actually the most interesting start or most interesting experience in the area of embedded finance was actually Uber, because this was basically the first, at least the first time I experienced just getting in the car, getting off of the car, and the payments just happened by itself. I mean, we don't have Amazon Go in Germany, so I didn't try this, which is a very similar experience with shopping. But you see more and more experiences like this. And I think embedded finance is one way to call it. What I would even prefer more is to call it contextual finance, because the finance is basically in the context of the customer or of the user. It's right there where they need it. And this is something I deeply believe is the future of finance. We will see more and more finance embedded in every service. And the interesting thing is what will be the role also of financial institutions, for banks and fintechs in this area.
Brilliant, excellent. Michael, can I ask you kind of from your perspective, you're within your discipline and looking after the partnerships at Mambu, where do you see embedded finance within the industry?
Well, I think there's a couple of ways I'll answer that to break it down, right? Mambu obviously takes a bit more of the technical lens, and actually does power some of these other, banking as a service embedded finance type propositions across the globe. So we see kind of a number of different propositions and how this is popping up. But I want to actually touch on a bit that Agnieszka just mentioned, and I think we're all maybe probably aligned on this. Embedded finance is not a newer topic, right? Embedded finance, at least, is something that has been around for years. If you think about airlines with credit cards, if you think about gift cards with retail stores, right? What's in this moment where you see the rise of very successful companies like Solarisbank, for example, and others, is that they are capturing on the new technologies that are becoming available into this industry. They are addressing the change in consumer behaviors, right? Just a little bit about this online shopping kind of experience, right? It's a no-brainer that COVID has driven this significantly up, right? So what's happened now is you're seeing even more so kind of the convergence of these non-financials that traditionally rely on banks or financial institutions to take care of the financial bit. And if actually I said, we can capture that financial bit ourselves, realize a bit of the prize, and embed some of those financial bits into our customer experience and add it as a value-added service, just to name a few examples.
Yeah, that approach to customer experience there, that's absolutely where embedded or contextual finance, Agnieszka, where that really sits. Florian, let's go to yourself, because as mentioned by Michael, you guys have been pretty successful within this field.
Yeah, I think it's going all right. Absolutely. I think we are kind of the perfect link between the two statements we just have heard, because in the end, Solarisbank is empowering and enabling embedded finance or contextual finance. And we do this on the one hand with technology, and on the other hand with our full banking license, meaning that we make it possible that companies, startups, fintechs, but established companies and especially established brands as well can integrate financial services seamlessly into their user experiences. And exactly as Agnieszka said, user experience here, I would say, is key. And Solarisbank makes it possible to focus on the user experience. And we, if you want to say so, we strip off all the burdens that come with the underlying rails and technical as well as license needs, because this is what we take care of in a way that it is fully compliant and yeah, in the end, integratable with ease into given user experiences.
Excellent, excellent. Let's talk user experience. I remember when I was at university, went to a friend's house, and they had, I kid you not, it was a coin operated electricity. Every day you had to put the coins in, and that then enabled more electricity to get to the house. That is something you don't, again, contextual finance and embedded finance has been around for a while. If you do a credit report on yourself, you'll see all sorts of other utilities on there. Equally, that user experience in terms of payments has just absolutely hockey sticked. Every industry, it seems, whether it be from parking to space exploration, the user experience itself has just got a lot more seamless. And by seamless, I mean, you don't have to do as much in order to get what you want, and easy to use, and which makes it a lot more accessible to everyone else. Yeah. So against that backdrop, there is that expectation that the experience will be seamless no matter the industry. What impact does this this expectation have on the banking industry in terms of setting what the customer will expect to see? Agnieszka, can I go to yourself first? So I gather you know a little bit about UX.
Yeah, sure. And I mean, when you look at the traditional banks, they definitely have a lot of work to do. I don't know if you remember the situation from the beginning of the year when one of the major banks accidentally transferred not just the interests, but the whole credit back to the like back out of the bank. And sorry, what I want how do you call it in English? Gläubiger.
Gläubiger. weiß nicht auch.
It depends. So most likely it's going to be the debtor.
Debtor, yeah, sorry.
But double check, it depends on the sentence.
We'll load up a picture of the news report as well. Was this where someone basically received a ridiculous sum of money in their bank account?
Yeah, no, that's basically the bank transferred the interest. Instead of the interest, they transferred the whole debt back to the debtor, or back to the money giver.
Huh? Potentially the creditor, or
the creditor. It would
the creditor potentially.
Yeah. Sorry. Once again. So the situation that was become known at the beginning of the year was that the major bank by accident transfer a huge sum of money to the creditors instead of just transferring the interest rate. And this was only possible because of a customer experience that was very, very unintuitive, and it's still in place in big financial institutions on a lot of levels. Also, when it comes to the interaction with the end customer, obviously a lot of things are getting smoother, getting better, getting more intuitive, like a lot of KYC processes that are getting better, onboarding processes that are getting better. But we live in the age of experience. We expect the experience. We don't expect to think about it. We definitely don't expect to wait for something. So the user now in 2021 wants to have everything now. And I mean, the big tech companies are teaching us this, with immediate delivery. When you look at companies that are getting, huge financing rounds right now with the immediate 10 minutes, 8 minutes, 7 minutes delivery, this is driving the trend totally. And as banks, as financial institutions, we need to get there. We need to give the users what they expect. Otherwise, someone else will do.
Yeah. I think I just have a couple thoughts. You sparked so many great ideas in my head. I don't want to lose them. I can't stress enough the Amazon Go example, because that is such a brilliant example of what we classify as hyper-personalization or customer-centric experiences, right? Obviously, Mambu was a bit more technology in the back-end aspect, but if we look just from conceptually what Amazon Go has done, essentially they've looked at the customer journey and identified that the biggest pain point in that customer journey is the checkout process. And if they can eradicate that checkout process entirely, they could likely increase conversion rates and have more spending, which ultimately results in more revenues. So I think, we've seen a few reports on our side and also from some of our customers where I think there was a Gartner study that came out that shows that some companies investing in personalization are outselling their counterparts by up to 30% or more, right? Deloitte found, I think, that 80% of their consumers are more likely to purchase the companies with personalized experiences, essentially. And so what we've seen from our 200 plus customers across the world has been that the product has kind of taken a bit of a backseat, and that experience has become the forward seat. I, as a consumer, don't want to care about the product behind my buy now, pay later proposition. I want to just know that I can buy now and pay later, and then everything else will kind of sort itself out. And to kind of round that off in terms of what opportunity this means for the financial industry or for banks in general, if they adopt these principles, essentially is using this whole customer-centric approach. To do so, you need to have access to data and embrace the rise of openness of data and PSD2 and all of these different elements together. And when you allow yourself as an organization, and I know, Florian, you probably can speak better to this than I can, but when you allow yourselves to do data-driven insights in terms of even just lending, for example, you can reduce your, reduction, you can reduce your non-performing loan rates, essentially. You can have a 15% reduction in collection costs. You can actually increase margins and service SME markets and, even so, and I think this is probably a good segue to you, Florian, you can actually tap into kind of these cash-rich non-financials and work with them essentially. So maybe, yeah, I don't know if there's anything else to mention, some thoughts.
Absolutely, I fully agree here. And the whole story around embedded finance is way bigger than just the payment part, right? So you have to think about this holistically, and you will see that with banking as a service, we, at least this is what Solarisbank is in the market for, we democratize the integration of financial services into existing products. And thereby we break down the market entry barriers, if you want to say so, for existing brands, for existing experiences into the financial sector. And I think this is the powerful shift here, because before, the incumbent banks have been able to get away with subpar user experience because they had a monopoly, if you want to say so, on their processes, because it was the market entry barriers have been so high that this was possible. They could keep their existing user experiences because they had this walled garden, and they had it very comfortable in there. And maybe now those times are over, because with technology, with a new view onto finance, it is out of a sudden possible to create those seamless user experience and integrate those financial services deeply into existing things, and things in the sense of there can be a multitude of use cases. Mm-hmm. And this is what people care about. I'm deeply convinced about that, because nobody wants to get a credit for a house, a car. People want to get this problem solved within the user experience they are already in. The credit is just a vehicle to make it happen. Mm-hmm. Nobody wants to care about payments. People transfer money to get things done. The money transfer itself is not a joyful experience. I mean, like maybe for us as bankers, but usually the end customer is not amazed because a transfer reaches the other end super fast. Sometimes they are, but usually this is not the main thing they care about. They want to get the job done. Yeah. And I think with banking as a service, with embedded finance, we make banking a commodity, if you want to say so. It sounds, being the one in the industry, that might sound a bit unattractive, but I think for the user, this is the very powerful thing, because the lending, the payment, all this steps into the background. It just works seamlessly. And this works for Amazon Go or within Uber, but this is true for many other use cases as well. So we leverage, for example, Mambu on our lending side to organize our credit ledgers, and this is deeply integrated into our tech stack, beside other core banking technology. And then we put our APIs on top together with the license to enable our partners to create those seamless experiences within the products. They are already there. And thereby, I would say, we as Solarisbank do our best to move the financial burdens rather to the background and make them seamless.
And also moving the technology to the background, because this is actually also fascinating. You have like these two levels, the finance and the technology, and the only thing that the customer is seeing at the end is magic. So it's like paradoxically that technology is making the experience actually more human, because there is a ton of technology behind, and without technology all the things will not be possible. But as a user, I don't see this, and I don't have to understand this. I don't have to take care of this. It is just happening for me, and this is I think like really amazing thing that's possible right now.
I always, whenever doing any of these, I'm always thinking, if I was in an audience right now and this was on stage, what would I be tweeting? Florian, that line of embedded finance makes banking a commodity. I mean, that's a very, very good kind of way of putting it. Now, I don't know if you've heard this quote before, but Bill Gates once said, again, if you've ever heard this before, do let me know. But he said, we need banking, but we don't need banks anymore. Probably a pretty underused quote. But I always find that fascinating because you look back at the history of finance, you've got AP Giannini with Bank of Italy, and that moved banking from being a few centralized locations to a branch network that instantly brought millions of people financial services. It brought that to the masses. And then, of course, the smartphone brought those millions, went from millions to having billions of people access to it. And now within each of these smartphones, there are a huge number of different apps and applications, and that brings it, well, the opportunity is there to bring not just finance to everyone, but also the right kind of products to every individual. And by right, I mean what they want, as we've talked about before, personalization. So yeah, banking services are pretty much everywhere, and the opportunity is everywhere for them to be. Every touch point in any industry has the chance for embedded finance. So to throw this open to all of you and building on what we've talked about in terms of that user experience, I need to visit an Amazon Go store, I really do. How can banks capitalize on this opportunity? Because you don't want to be left to the side, and there is a massive opportunity for finance firms to really take advantage of the technology, as Agnieszka said, the technology is here now to use embedded finance. Mm-hmm. Agnieszka, did you want to take that first? What should banks be doing in this space?
I mean, they are already seeing this trend. A lot of banks are also talking about embedded finance and actually doing things in this area. And I mean, the topics we touched upon until now were mostly in like end customer area, but that's not the only part. I mean, there are also great opportunities in the business to business area. When it comes to topics like trade finance, there are great opportunities for embedded finance, for example, or also quite recently, Commerzbank enabled handling of transactions between Evonik and BASF via digital money. So basically, it makes also possible transactions between these two companies much more seamless and without a lot of manual work. So when we speak of customer experience and when we speak of embedded finance, this is not just, the stuff we see as users, but it's also like all the business to business efficiency part, actually. And this is obviously also one thing I see with banks, as they have the connections, they are serving this kind of customers. So this is definitely an option for them. And on the other hand, obviously for all the companies who are not in the financial service industry, but have all these touch points in the journey, this is also something to think of and maybe cooperate with their bank on this kind of topics. But also on the other hand, obviously, all the topics we're already talking about, you see basically every week or probably every day news from companies like Stripe, for example. Now they started a new product in the field of KYC. So this is obviously also something a bank could do. Yeah, I mean, they're a little bit behind right now with this kind of companies. On the other hand, you see then again a bank like Goldman cooperating, for example, with Apple. So there are a lot of opportunities for banks. It's like not that the battle is lost or won now. So everyone has an opportunity in this field, and this makes it so interesting.
I think so too, and I don't know if it's all right to disagree with Bill Gates.
But I think it's fine.
I think we'll be okay.
He'll probably enjoy it.
I think there's still a good reason that banks are out there. At least me personally, I don't want to live in a world where banks do not exist anymore. And I do not say this as a banker, but as an actual citizen of a society, because there is a fair reason that banks are out there, that they are regulated by the state, and that there is supervision and control to make sure that the financial ecosystem is controlled and works for the people and not against the people. And I think this is a notion which is sometimes a bit lost when we discuss about cryptocurrencies and getting rid of the banking system, etc., etc. So I fully agree with Gates when he thinks about the user experience. Sometimes banks there stand in the way of what people want to achieve, and this is changing now, and this is one of my main motivators personally to work in this industry and drive banking as a service forward. But on the other hand, it's great that society has an eye on those systems and makes sure that those systems work for the people and not against them. Yeah. And from that point of view, I think it's a good thing that banks are still around.
May I add just a short thing to this, because it remembers me on also on an interesting questionnaire, interesting statistics, because we always discuss, especially after the financial crisis, that the banks are not very trustworthy, yeah. And you know, they have quite a bad image. But actually, people still trust banks more than if, for example, trust big techs or fintechs. So they still have a specific positioning, and that people generally trust them in some sense.
Michael, can I get you to weigh in here? Because I imagine some of the organizations that you work with are really looking at how best to capitalize on the embedded finance era.
I think it's a couple things. You know, I always like to say, the reason for this eroded trust maybe is obviously a result of some practices of the banking institutions previously, right? So this in itself has driven the need for a new kind of consumer experience, if you will. Banks historically have made customers work on their behalf. And I think what you're seeing now is customers are demanding that banks work on their behalf, right? And that paradigm shift is what's changing this, right? From my perspective, right, I think banks just have to really adapt and adopt 5 really kind of major trends, right? They need to really understand that consumer behaviors are changing. They need to understand specifically what that actually means in their business. So not just lowering interest rates or eroding fees in bank accounts, but actually partnering with brands to be able to launch better services. I mean, just to mention Solaris again, how many brands are you currently working with? And these brands themselves are recognized if you look at, you know, some of the ones that you have. And behind all these brands is one bank, right? It is all Solaris. And how many people I know, even in Berlin and Germany, that use these other brands. And as soon as I reference, oh, that's actually a Solaris, you know, bank brand that's working together, it's kind of a, wow, that's actually banking. I didn't realize, or this is something in that case. And so that kind of way of thinking is what's happening. I think the second is really banks need to start to embrace banking disruptors. I think there's always been this little fintech versus bank friction that's existed, or will they become a big thing? Will they not become a big thing? Is the threat of tech giants entering into the space real, or is it not real? I think the convergence of being able to provide services and find a harmony within this is something that's going to be very critical. Banking as a service, that's my third point, kind of goes without being said. That's also a pretty critical piece. I can't stress again, my fourth point, the rise of openness and being able to actually better use data-driven insights. And ultimately, the last point, which I think is probably the most critical bit, is don't overlook certain customer segments because they're just deemed to be too expensive or unprofitable. find ways to optimize your architecture, your technology, your experience to be able to serve this market. Otherwise, there will be others that enter. One of our other customers, New10, which is a spin-off of ABN AMRO, captured this model back in 2016, quite early in the stage of this adoption, right? They identified that the SME market is traditionally high risk, not a lot of reward, and just not marginally appealing, if you will. And so how did they tackle it? They broke it down from organizational, right? How do we have to reorganize ourselves? Maybe we have to create a specifically brand new brand and even a whole new team separate from the actual, incumbent aspect. The second is how do we embrace the rise of new technologies and work with SaaS solutions, cloud-based, more cloud-native solutions, API-first initiatives, these things. And then the third is, understand that banking is not finite, it is infinite, which means it is continually evolving and we'll need to keep adapting. And can we build an organizational and team and practices around adapting to this rapidly changing environment? So I think more organizationally is kind of another bit.
Maybe just one thing. So what you were speaking about is basically showing how banking or finance has become general ecosystem. And there are like a lot of players from financial service, but also some from non-financial service. When you look at automotive, when you look at telco, so many interactions with finance, when you look at retail. And the question is, who will play which role in this ecosystem? And even probably switching roles depending on the specific need. And this is actually quite an interesting field we are now, because the roles in the ecosystem are not fixed yet. They are still like fluid and evaluating.
Yeah, very true.
New10 is a kind of a perfect example. I'm a big fan of the work they do, but unfortunately they've made it look really easy, and so you then have the likes of Bo and RBS is kind of the textbook one of trying to kind of build that speedboat bank that didn't quite gain the same level of traction that perhaps it might have done. I don't want to go kind of too deep into fintechs versus big banks, but in terms of embedded finance, do you think that they're trying to repeat the same business model as opposed to try something new with where finance can be embedded?
Maybe repeat the question just so I can understand the context of that.
So do you think banks are basically trying to go, right, so we're gonna try and build, they want finance, we're gonna try and build a new bank, and banks need to have this, banks need to have this, banks need to have this, as opposed to an example where, for example, Amazon Go goes back to looking at the customer first and goes, they just want to walk in and walk out. We'll have the payment method where the finance is happening automatically as people leave. Do you think banks need to get out that mindset of trying to rebuild what's already come before?
I think banks, it very much depends on the geography. I think if I'm being specific, right? I think it's very unique to where you have to look at it from a couple of different lenses, right? Europe, Germany, other markets in this area have adopted some of the, from a regulatory perspective, I should say, the ability to do things like this, right? So cloud even in itself was a struggle in some countries still, for example. So I think from one thing, when banks try to change and adapt overall and try and even introduce this just in the context of embedded finance, you have to look at it through, in my geography, from a regulatory perspective, how can I do this? And what's the risk of doing so, right? And that kind of will enable you to understand which type of service or product should I do. I don't think it's necessarily, do we try to repeat a number 26 or should we buy the number 26 discussion, right? I think that's kind of out the window, that's in the past, right? I think now players have placed their stakes in the ground, right? And now, to Agnieszka's point earlier, it's about how these players play with each other and where in the market they're all kind of working with each other. Just, does one company want to offer a buy now, pay later proposition specifically, although they have a license to offer all different propositions? Or should we hyper focus on just one geography and offer all financial services in this one geography, right? This kind of, this consulting brain in my mind kind of creates a little bit of a matrix, which I wish I could just project onto the screen, of almost like regulatory versus time versus cost versus profitability. These metrics are things that institutions need to take to be able to make those decisions on how they want to play. But I don't think it's a rebuild versus, approach, if you will.
Excellent. Well, let's look at some of the kind of the use cases, not just from a geographical perspective, but from a vertical perspective too, because, well, everyone is getting into banking, it seems. IKEA, EasyJet, and AirAsia have both announced work that they're doing within the payments market.
And I think
Florian,
and I think they're the framework basically Michael just described becomes a bit more too complex for just a PowerPoint slide. So it wouldn't be a four-field matrix, but way more, because I think we touched both aspects already before in the conversation. It's about brand, and this links to all the things you have mentioned. Do people trust for a certain use case their bank or IKEA? Mm-hmm. Well, I would say it depends on what they want to achieve. And in many cases, maybe IKEA would be the brand that gets more trust for this specific embedded finance service. And I think banks in the past 10, 15, 20 years jeopardized their brands to quite some extent. And now just coming along and say like, well, let's do a rebranding. We just find a fancy new young brands and everything is going to be fine. It's not that easy, because with embedded finance, the market entry barriers drop significantly. So out of a sudden, they do not compete with other banking brands, like, of course, N26 as an example is still a very, very strong competitor in the typical banking sector. But the embedded finance competition works on completely different means. And therefore, just spinning up another banking brand will give them market share against N26.
Yeah.
But that is not the game the others play. The others play embedded finance game. And just spinning up another banking brand will, in the end, lead to a situation where they just compete in the same game while the others play a different game.
Yeah.
And that's gonna lead to, let's say, interesting dynamics.
Yeah.
Can I just ask a sort of follow-up thing there around again, IKEA, trusted brand. Do you think the fact that IKEA, as soon as it starts doing a lot of stuff and more things within, say, consumer banking services, do you think by nature of the fact it's doing work within that industry, its trust is actually going to decrease just by nature of the fact it's in the industry? Or do you think it will, well, depending how it's delivered, it would arguably go up? Do you think it's down to the brand or the nature of the beast, so to speak?
I think the brand is always trusted in a particular context, and I trust IKEA with my furniture, and then I trust IKEA. I might trust. That's.
I was going to say, I'm not sure if
I perfectly trust. I trust IKEA. I trust IKEA with giving me an interesting thing to do when I put together all this stuff. Or I don't know, I might trust Adidas with a particular thing, but then I don't trust them with another thing, So it's always what I associate with them, and also for me it's still all around the need and all around like the media break, when I have to go somewhere else to get what I actually need, I'm out. When I buy something and then I have to go to the bank to get the credit, I might reconsider. Every time I switch, I get out of the journey. That's potentially a conversion killer, and that's why I stress this ecosystem option. One thing is, so who is providing these journeys? Who has the customers? Who is serving the needs? And I think that banks, for example, can learn from these non-financial brands, because they come from a different perspective. They understand more about other customer needs, for example. They understand the customer journeys, and then it's not maybe the question, do I trust IKEA or do I trust Deutsche Bank, it's the question. Okay, I have the IKEA. Okay, they will not work with Deutsche Bank because they have their own bank. But hypothetically, I trust IKEA with my shopping experience. But then I see, okay, they are servicing the credit line, for example, that I can get directly, or there is an insurance company embedded that is providing the insurance for all the goods. And then I probably trust the ecosystem, and that's I think something we have to find out. It's not really to say like, do I trust them more or do I trust them more? It's this ecosystem play.
Yeah, I think I'd love to just highlight an example of where a brand has actually pivoted into banking, and where that's actually something I've seen successful, and honestly something where I was surprised when I first came across it, and it's happening more and more now frequently. Look at Orange Telco. That is a brilliant example of when they approached us in, I think it was 2018, we can fact check that, and to essentially launch a bank, or essentially work with us to launch a bank in Spain. I remember seeing this coming in and thinking, what is a telco? It's in banking, it's phones. What does this make sense? But then you realize that Orange as a company has such a strong brand in a number of different organizations and countries. It is trusted, it is proven, and they have pivoted into essentially the financial space because they've been able to also encapsulate on the big data that they use to have better insights, to understand the types of financial products that their consumers are going to need, how they can better tailor lending and products, deposit products, insurance, even all these other things that they're working on. And that particular segment, it might not be that Starbucks, for example, I would put my money with Starbucks in a bank account if Starbucks launched a bank, although I nowadays don't know if I outrule anything of who wants to launch into banking. But I think that a telephone provider or someone of that sort, it also comes down to that category and their credibility in that market.
Orange Bank's a great example. Florian, did you want to weigh in on this?
Yeah.
So I imagine you've got some great examples here.
And I think that too, it's a beautiful example, which shows as well how the perception of trust changed in the last, well, let's say since the iPhone, so basically 15 years potentially, that people trust user experience and technology, if it's well done, way more than John Doe in the rural Sparkasse, which calls himself a banking consultant who decides in my favor, but in the end he doesn't decide in my favor, but in his Sparkasse's favor. This trust is lost, I would say, while at the same time people started to trust their devices because they have their phone in their hand every day. When the experience is well done, this seems or is so seamless that that they just move on. They just do this because with a good user experience, it adds up to the brand, and brands are trust. And in the end, what you need for banking is trust. And for that reason, I fully agree with Agnieszka that it depends on the context. But in the right context, people tend to trust certain brands way more than a random banking brand, which just offers basically the whole vertical in a non-seamless user experience.
Maybe I can just also add an example, which was also recently quite interesting. We can definitely discuss if this brand is trustworthy. But the example you showed with Orange and banking, and also what you, Florian, said, we trust certain devices, things that we use. And one of the devices, a different one we use, is a car. And a certain American car company that is led by a very crazy person also recently actually
got into flamethrowers, didn't they?
Sorry?
They got into flamethrowers, didn't they?
They sometimes go in flames, but and they buy bitcoins and then they don't buy bitcoins, But what they recently did, now it's obvious that we are speaking about Tesla, they actually registered an insurance in Germany as well, you know, and this is also pretty logical. So when we speak of financial services, not just banking, it's obviously also insurance. And yeah, I mean, why should I go somewhere else to insure my car? Why don't I have it as a part of a service within my car, you know? And I think the whole insurance topic will really also get quite interesting, especially, you know, in Germany, we really love insurance, you know. We are insured, we have like tons of insurance, like for everything.
Insurance for insurance.
Yeah, insurance for insurance, actually. As I came to Germany, I have really no idea that I need so much insurance. But yeah, having this actually also embedded in the devices, in the car, embedded in the whole process of, you know, buying something or having an experience that I actually want to insure, it's also quite an interesting aspect. And I mean, we are already seeing quite a lot in this space as well.
The last thing I kind of want to touch on before on this, and actually rounds out neatly with, it is a cliche, but my God, it's a good example, is Uber. Uber has affected the taxi industry so much that now if I take a black cab in London, I get out and and then I'm trained now by Uber to just get out the car and not pay, as opposed to I don't have to manually sort of go back and do the friction if I'm using a black cab. That kind of training is rife across consumers now. You can see a similar thing happening when Amazon Go becomes more and more prolific, that the smaller shops that don't have that kind of experience, people will just walk out thinking, oh yeah, of course it will automatically take it. With that in mind, against the changing and future consumer expectations, what is the future of embedded finance, and why should companies care and keep investing within this remit? Do you go first, Agnieszka?
I think it's very easy to get used to a good experience. I just really had this yesterday. You know, I was working on my iPad, and then I switched to my computer, and I wanted to scroll with my finger through the screen, because it comes so naturally, you know. And I think this is the same with all the financial service topics, you know. When you see, like, for example, the Uber experience, or what you said is Amazon, the Amazon cashier shops that you just go out, and I believe that it will go pretty much in this direction. It's going to be even more personalized, even more automated, and there are obviously also things that are somehow concerning. So I believe one of the aspects within embedded finance in the future can become the topic of financial health, because, you know, not thinking about the fact that we have to pay makes us also spend more, and makes us maybe spend the money not in a way that's most sustainable for us. So I believe that financial health will become an aspect, and this will be probably also something that's embedded. There is already also like a neobank, still pretty small, that's basically working with a chat interface where I can just write, can I afford this? You know, I want to buy this and that's how can I afford this? And I'm really looking forward to this kind of aspects. Yeah. And yeah, I really believe in the ecosystem topic, and I have no idea right now who will win the race. Maybe there will be totally unexpected winners. You know, we have no idea, or they maybe don't even exist yet. But there is still so much to do. That yeah, I mean, I'm very poor with my glass. Sphere. I don't know how do you say it?
Crystal ball.
Or
crystal ball.
Crystal ball.
with my crystal ball, because there's like so many movement in so many directions. But I'm really pretty sure that it's going to be more intuitive. It's going to be more automated, more personalized, and the overall experience will be better, both in a B2C and a B2B context.
Yeah.
I was hoping you would do a real cheesy kind of point at the camera and be like, the winner is you, the consultant. Michael.
Yeah, no, I think Agnieszka, you covered everything. I actually was crossing off my list of things I wanted to mention as you were speaking. But I think I want to stress one critical thing, right? I think building off of the financial fitness or financial health, this is, in my personal opinion, not representative of anything. This is exactly the next wave of where embedded finance can shift into. If you look at companies like PFC in the Nordics, which are a digital, money app, they're not even branding themselves specifically, I think, as a bank. They're a money app that kind of has all different types of services, goals planning and budgeting that's embedded in this one app there. I think that's one case. Some of the big banks have even started to adopt it with a financial fitness score from HSBC. They've launched something where you can fill out a questionnaire and show how fit you are financially. So I think that element is going to be critical. Where that transpires, though, throughout embedded finance, if we make it relatable to a specific product, I think it is better data-driven insights around scoring and decisioning around lending, right? I think we're about to enter into an economy as a result of quite a hopefully once in a lifetime experience of a pandemic, although I'm not sure if this is the last one. We will, we're about to enter into post-pandemic economy, right? So how do we still ensure that credits and lending can be available to those that were significantly impacted by this experience, right? And potentially have had eroded credit scores as a result of furlough or being laid off, or I forget what it's called in German, small short time, Kurzarbeit, these things here. So you need to be able to embrace the adoption of big data. And actually, if you look at a company in the UK called Bud, for example, they're actually using rental repayments or rent payments, accuracy of that as a way to provide an API for banks to start using and to score and decide based on that element of data, coupled with connecting to Gmail, where there's other companies I've seen out there in the past that are seeing your response rate on emails, and all of this together kind of helps them understand you, which ultimately means you become more creditworthy in their perspective. And by them, I mean the financial institution. And that ultimately just is a win-win overall. I think that's the future of where we're seeing the shift. Very
well said there, especially around credit scores, because that's going to be a whole other topic.
Yeah.
Florian, can I get your viewpoint? I mean, you may already know, but can I keep it close to your chest? But where do you see the future of embedded finance?
Well, I think we touched on basically all details within the last hour, and from my point of view, I would summarize it in a way by saying that classical banking at the moment is very often still a burden and far away from being fair or easy or frictionless. And it shouldn't be like that. And from that point of view, to some extent, I think we're going to see a fall of classical banking and a rise of embedded finance by making banking a commodity underneath, so that seamless user experience can stand on top of it to make banking easy, seamless, and joyful. And there is still a lot to do. Many banking experiences are far away from this. So really look forward to those easy experiences and all the innovation that will come with it and enable it.
Thank you so much. We're going to take a 1 minute break now, and then we're going to have some questions from the audience. That's incredible. Look at these. Michael, Florian, you guys have, that's the fastest haircut I've ever seen in my life.
We're living in an agile economy. We have to keep up with the rapid pace. So that transpires also to haircuts.
Yeah, I mean, it's
not only the 7 minutes grocery delivery, but like the 7 minutes haircut delivery. Yeah,
that is the next level. Yes,
it's by gorillas, I guess you could say.
Excellent. Beauty as a service. Right, we've actually got a couple of questions. I've got one that I want to bring up first of all, because I think it's a great one. I'm really sorry, I'm gonna mispronounce your name, but I'm gonna go for it with confidence. Taran Kishnani, and I believe you're from ICICI. He says, are banks in competition with everyone in tech? And what is made, given that we now do banking with a lot of people without actually meeting the customer, since we have so much data on customers with their digital history? An example I always bring up for this, I personally use Gmail. I have never spoken to anyone from Gmail. I've never had to contact their customer services or any kind of customer support because the product is completely on the money. Equally, I know we talk about Amazon a lot as an example, but I've never had to really contact Amazon because they focus so heavily on the product that there's no need for that. Same with Square. So how with so much data, how are banks in competition with tech, and where does embedded finance play into this?
I think we can already see the competition, by both Google and Apple and Amazon and basically pretty much everyone getting into the sphere of financial services. But on the other hand, we kind of observe the frenemy approach, you see Deutsche Bank cooperating with Google on certain aspects, and you see, the Google card, the Apple card, is in cooperation with Goldman. So there is cooperation. And for me, as I said before, there is the ecosystem question and who will play which role in the ecosystem. Which doesn't mean that the banks should say, oh, that's fine. We're in a good place and there will be place for everyone in the ecosystem. Don't misinterpret me in this way. I think what the Googles and other big techs are doing very well is kind of being in the point of need of the customer. That's the one side. On the other hand, when you see the trust level when it comes especially to financial services, they are not that trusted as the banks are in the moment. So even though the trust of banks or of people in banks kind of depreciated, but still they are still trusted when it comes to data, for example, especially after recent scandals with the big techs and in the context of data. So they are in competition, but the race is still on.
Yeah,
I think from my point of view, sorry, Michael. From my point of view, I think we have to twist the question maybe a little bit, because from my point of view, all companies are in competition for the best user experience.
Yeah.
And then the question is, what is the best user experience? Of course, you could spin up a Gmail service with a personal assistant, but this would be more expensive and potentially more cumbersome. I love that I do not have to call anybody to log into my Gmail account. And that might be true for many, many other user experiences around personal finance. So I think that is the competition vector we have to talk about. And very often a person is not needed anymore due to tech. So tech is the enabler for different user experiences from my point of view.
Agreed. And just to add one more point to that, I think it's also the access that these big techs, and also I'd include telcos in that mix as well, the amount of data that they have already accessible to them to make better data-driven insights and have customer-centric approaches when it comes to products, along with brand recognition, does give maybe perception-wise a bit more of an advantage from their perspective. But to Agnieszka's point earlier, the trust element behind the banking level has not yet quite reached where a traditional bank might already have with their consumers. So there's some thoughts to add.
Absolutely.
Maybe just one thing, sorry, on the personal side, on the side that the big techs didn't meet their customers. In our generation, millennials would prefer to go to dentist than to go to a bank branch. And I feel it myself, you know, when there's like some bank advisor trying to call me, I'm like, you know, my pulse is getting up, and I just like, you know, don't call me, just you know, just give me the access to self-service and to do it like remotely, but please don't call me. I don't want to talk to you.
Absolutely. I do want to point out, and I won't go too far into it, but one of the few companies to take on Amazon and, for want of a better word, win, was well, Square and a fintech, and that's because they utilized the innovation stack and how they dealt with customers so efficiently. Following this on around big tech, I've got another question from Ty Lee, which is about unbundling. The big tech, the big guys, they are unbundling banking services. What can the very large banks do to cope with this unbundling trend? I'm sure a lot of people, if you've cracked this, please, you know.
I think,
Michael, do you want to go first?
Yeah. I was going to say, I think it comes from analyzing specifically the product lines in which they need to unbundle from the banking, right? It kind of ties into that customer-centric approach in terms of what customers are actually demanding within the markets these banks are operating. And I think it's starting to, one, look at organizational change in terms of how the organization itself needs to change to be able to stay competitive with this unbundling that's existing. And then two, embracing, as I come from more of the technical world, if you will, in this space, adopting new technologies, adopting new ways of working, implementing products and services, adopting cloud, agile principles, these solutions, to be able to meet these kind of expectations and work within data-driven insights, hyper-personalization, and those kind of elements there. Maybe, Florian, from your perspective, maybe you have some thoughts around how the Solaris bit is tackling from the actual bank side.
Well, customer centricity, I think, is the major starting point, and then thinking about the user experience again, thinking where established banks can offer added value that might not be that easily covered by digital user experiences, because I think for now, big banks have to accept that in digital user experiences are better built by big tech at the moment. So we need to leverage brand and personal connection to cope with that, I would say.
But the unbundling, you know, you see this in banking, but you see it like in everywhere, that you have like basically constant fluctuations between unbundling and rebundling, you know, because you started, like, for example, the fintech started with a very specific product, and basically, as you said, unbundling the services, and then you see they are starting adding other things and maybe bundling with another experience, and that's what you have seen in apps, you know, besides just financial services, kind of unbundle, then rebundle, then unbundle again, then rebundle again.
And of course, I think it's fair to admit that banks need to leapfrog on the technology end. So it feels like that somewhere in the 80s, big banks agreed on a non-attack contract that technology is nothing they're going to compete with. And this changed tremendously in the last 5 years, 10 years. And now this is something that need to be leapfrogged. And I think Solarisbank, as well as Mambu, we are enablers for this big step forward on the technology end, to be able to compete again with technology giants. Excellent.
There you go, Ty. I've got another one I want to bring up, and I'm ready to bring it up because I know this could be a very, very long discussion. This is from Friederike. Do you see any risks arising with embedded finance for the consumer? And how can companies ensure financial well-being of their consumers in this instance? This is obviously consumers effectively almost becoming a bit of a product. Agnieszka, I can see you nodding away there. Do you want to go with that one?
Yeah, I mean, obviously, as we all also touched the aspect of financial well-being, being an opportunity, but also being a risk? This is a very important question that's not easy to answer with just a few words. So I see two possibilities in going into two different directions. I see an opportunity of actually guaranteeing more financial well-being because of having the whole information about the customer data, about the customer situation, about their spendings and needs. And I really hope that we will move into this direction. Obviously, there is when it comes to basically all experience, but especially an experience that has to do with either finance or sensitive data or both, obviously all the companies needs to have some checks and balances when it comes to ethical use of the data and ethical use of the financial information. In Germany, the topics are also fairly regulated. I think we're kind of, I see a lower risk here of this going totally sideways. It's less regulated in different areas when it's more about the companies kind of sticking to ethical standards. But yeah, I think that's the question that will keep us busy for the years to come.
Michael.
Yeah, no, I was going to say, I think, you look at the rise of point of sale lending, buy now, pay later propositions, right? These are fantastic solutions that are addressing very specific customer needs as a part of a customer journey within embedded finance context. So on one hand, that's a tremendous outcome, right? On the other hand, you have to be careful and look at and make sure that the customer is aware of what is going on. Sometimes as consumers, our own behaviors can be our own demise, if you will. And if we're not made aware of what's actually, if you're buying a purchase and it's actually being financed and what that interest rate is and those kinds of elements, there could be a little bit of a risk in terms of how many outstanding credits do I actually have as a consumer? Where are my credits and how is my credit score being impacted? So that brings to the point where having the rise of democratizing data essentially and making actual data becoming more accessible so that it can be shared freely amongst different institutions and centralized so that better data-driven insights and the consumer has better visibility into their holistic kind of point of view without having a bottleneck of a banker calling you and then telling you have to do this or that. So I think it's a risk, but there's also an area of opportunity to address that risk because of some of the trends as well.
Absolutely. I mean, the opportunity there is huge, especially when you've got, I was speaking with a company called Bloom, which is more about trying to become the Google Translate of data. So from people coming from, say, for example, Syria, with an incredibly huge data, which is no longer accepted anywhere, is how to almost translate that. But as you said, it is about democratizing that data. Florian.
Yes, well, I would say I fully agree with the round, absolutely. And well, maybe we're going to see waves in the sense that the market will adapt to the different knowledge of the customer. At the moment, I think it's fair to say that the overall landscape is a bit overwhelming to end customers. And maybe we're going to see more and more offers that come together and that makes the overall landscape, the product landscape and offering landscape a bit easier to digest for the end customer. But this is going to be a market development that is still in the making, I would say.
Yeah, nice, easy question there, Frida. I think we've got time for one more question. I want to go for, and again, apologies for mispronouncing, for Vishwas Misor. I quite like this one. Banks obviously provide a lot of services. Banks provide a lot of services through platforms like Android, like AWS. If the likes of Google, Apple, and Microsoft literally entered banking in a almost homogenous product kind of way, is there a conflict of interest, and is that a problem? Because I know, for example, Amazon competes with Netflix with the old Prime Video, but Netflix runs off AWS. Is there a conflict of interest there, and does it matter?
there is a constant conflict and interest when within the whole platform businesses. We have this discussion also on a regulatory level now, besides financial services, with Amazon, for example, that's accused of unfair competition when it comes to pushing their products. You have this also with telecom. You had this discussion with telecom carriers that are allowing a higher speed of data for certain services that were participating financially in those deals. So obviously there will be some conflicts and interests, or they are already. So this is something where I believe in some regulatory aspects, to be honest. So that, for example, Google, who is servicing Deutsche Bank with cloud, will not at a certain point of time say, okay, I have now services competing with Deutsche Bank, so let's just make their services slower so that the users don't want to need this. I pretty much believe that we're in a good place to actually regulate it correctly, but the general topic of competition and platform business, that's something that's causing a headache with regulators all over the world already.
Excellent. Michael and Florian, did you want to weigh in on that at all? No? Excellent. Well,
no, I think, Agnieszka, you are always tremendous at saying these things. I have to say, I think that you've hit a lot of the nails on the head with that one, to be honest. I think, I don't have too much more to comment.
Yeah, I agree. Agnieszka mentioned the frenemy term already earlier in the conversation. I think this is the vector we're going to see if that development would come into play.
Excellent. That's, again, frenemy. That's the best description for it. Well, thank you so much for first of all for all of our attendees. Little prize, Frida. There we go, Frida. I'll drop you an email and we'll send this in the post to you. I don't know where in the world you are, so I'm really hoping that you're not in the middle of the Pacific Ocean, but that will be coming your way. Guys, thank you so much again for taking the time to join me for this panel. Florian, where is the best place to find out more about yourself and to strike up any kind of conversation with you? What's your preferred route, your preferred method?
I think LinkedIn is the best place to reach me. Just Florian Redeker, and you're going to find me.
Brilliant, excellent. Agnieszka?
It's I'm everywhere. So, but definitely for the most work-related stuff is LinkedIn, or obviously Twitter, which I still use, and
me too.
Yeah.
I always feel LinkedIn is the conference circuit itself, and Twitter's the bar afterwards. That's kind of the description.
Very true.
Michael, where's best to find out more about yourself and Mambu, and your best port of call? Twitter?
Yeah, well, Twitter, LinkedIn. That's more so LinkedIn for myself, but yeah, you can find me there.
Excellent. And I'm Ali Patterson everywhere. Guys, thank you so much. This is the first of the series. We're going to be doing a bunch of these. So yeah, we'll catch you all very soon.